Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is a 4-hour chart of gold USD in front of us, and as you can see that right now gold is trading at 1808. If you have watched my previous video on gold, then hopefully you were ready when gold started reversing from this level again. So let's try to understand what are the trading opportunities on the chart of gold and what is going on in the chart of gold, one by one, step by step. Okay, so first of all, okay, as we have already discussed that market is in downtrend, as we can clearly see that the trend of the gold is towards the downside. Gold is constantly forming new lows, which we also call as lower lows in the market, unable to cross the previous heights, which signify the dominance of sellers in the market. So my dear friends, if you have an ongoing buy position on gold, or if you are planning to take any buy position on gold right now, then you must be very careful. After all, this looks like a seller's market right now. Okay, and as we all know that market has only one rule, and that is trend. So trend of the market is right now towards the downside. As a result, it's much safer to be on the sell position only. And I was going through some articles and I saw this gold price forecast. Gold USD to stay on the back foot with factors boosting the dollars unchanged. Buyers to remain on the sidelines in the near term, which signifies the dominance of sellers. So gold will remain bearish if we go by the experts for the next couple of days and weeks. So my dear friends, please be careful. And today, if you look at the forexfactory.com, then we can see that on May 18 we do not have any such big event coming up that will bring some crazy volatility to the market. So overall we can just assume that the present trend of gold may remain intact. So as a result, we may see further selling on the chart of gold. And if we follow the pattern of gold here, then we can see that gold is breaking previous lows every time. And though we have a support around 1800, but if we follow the pattern of gold, then there is a high chance, high possibility that gold will be breaking the level of 1800 again. If you are an experienced trader, if you have considerable experience in the market, then you may see some sort of bounce on 1800. Okay, and you can expect a movement of around 30 to 40 pips if gold bounces from 1800 level. But my dear friends, this is very risky, especially beginners, new traders. You should not be doing this kind of job in the market, because after all it is our responsibility to protect our capital, isn't it? So if gold comes down to 1800 level, 1800 being a psychological support in the market, okay, watch the market first, observe the market first. Okay, if you see some kind of bounce or reversal with high risk, you can try to buy, but again I'm saying it's high risk. Okay, it's high risk to buy. Do not expect any trend reversal, because as of now we do not have any factors, any events that will give us confirmation regarding the trend reversal. Okay, so if market bounces for 30-40 pips with a high risk buy, you can try, otherwise it's better to avoid. And if the selling pressure continues, then the next important support is around 1780. Okay, 1780, you may see some sort of bounce. You can try to go for a buy at 1780 level if market bounces. Yes, my dear friends, never forget, no level is permanent in the market, but our capital is limited. Okay, never make the mistake. So if market bounces from 1780, we can go for a buy, but after 1800, okay, if gold breaks the level of 1800, and if the selling pressure is high enough, you can go for a sell position as well. Not till 1780 level, but yes, you can expect at least 40-50 pips if gold breaks the level of 1800, because if gold breaks the level of 1800 with high selling pressure, there will be a selling of at least 50 to 100 pips. It means that gold should touch the level of 1790 as well. So things are a little bit critical. Okay, if you are unable to understand the market right now, then my dear friends, the things are not very simple right now, because we all know it very well that market has changed the body language of it when the war between Russia and Ukraine broke out. So as a result, levels are not working precisely. Okay, they used to work before. So your trading style needs flexibility. Every trader needs to be flexible according to the market. Okay, so again I'm repeating, we have a psychological support around 1800 level, but 1800 level is not a very reliable level. As a result, if you want to avoid 1800, skip it, because personally I will not suggest anyone to trade on 1800 level. But yes, being a psychological support, okay, there may be a small bounce of 30-40 pips. If you have the experience to catch those kind of movement, you can go for it. Otherwise, just avoid it. And if the selling continues, the present selling continues, then there's a possibility that gold will break 1800 level and will be going going down, will go down towards 1790. So you can expect to make 40, 50, 70, 80 pips if gold breaks 1800 level, if the selling pressure is high enough. And the next important support for gold is around 1780. Good possibility of market bouncing, but as we have already seen, the fundamental factors are also pointing, the experts are also of the opinion that gold will remain bearish. So yes, there's a possibility of market bouncing from 1780. If market bounces from 1780, 1779 level, you can definitely go for a buy. Okay, but my dear friends, keep in mind, market is volatile, things are risky, very as a result, please follow proper risk management. After all, it is our responsibility to protect our hard-earned money. So please do not be a gambler, be a trader, and with proper risk management only take position. After all, see, no analysis is perfect. My analysis can be wrong as well. So for one bad trade, two bad trades, you should not be wiping out your whole capital. So my request, with proper risk management only trade. Okay, so this is it. Hopefully you've understood. Bye bye. Take care. See you again.